My name is Lee Barker. I'm the president of Sparton Resources Inc., which is a junior exploration company based in Toronto, Ontario, Canada. We have a number of projects in Ontario and Quebec, and we have a hard asset interest in a company that manufactures large-scale grid-type vanadium flow batteries. And here I am to try and give you more details about what we do and why we're doing it.
Wonderful, Lee. I appreciate you making the time. Want to hear about Sparton Resources. We've not spoken or met before, so maybe we can start with a little bit of background on yourself. What have you been involved with in the past?
Well, I'm a bit of a hybrid. I started off as a mining engineer and I switched into mineral exploration. I have a master's degree in mineral exploration from the Building University many years ago. I've been involved in the mineral exploration and mining industry for the past 60 years, actually. I have a number of discoveries to my credit. The best one would be the Diavik Diamond Mine in the Northwest Territories. I actually did all the initial work that discovered that diamond mine, and I named it, in fact. And over the years, I've worked for large companies and small companies, and I've been involved in approximately 18 discoveries that actually went into production.
Okay, that's quite the resume.
Yeah, I don't broadcast myself a lot, but the documentation is there.
Okay, well, look, what I'm interested in is the company itself, and what your plans are. Obviously, I think we'll talk about the VRFB element in a second, but let's talk about the business model, the business plan that you employ at Sparton. What are you setting out to be, or what are you trying to?
Well, Sparton is a small junior resource exploration company, like many others that are listed on the Toronto Venture Exchange. The company's been around actually since 1985. The company's not new. It's had a number of senior executives like myself. I've been the president since 2003. Interestingly, in the history of the company, the first corporate secretary was Pierre Lassonde, who was the chairman of Franco-Nevada, who was well at VRB. He may even be there. But we've been, gone through the various cycles of the mineral exploration business over the last over 40 years, actually. And I became a director of the company in 1985 because we had a joint venture with Sparton on the project that we discovered a small gold deposit, actually, in Eastern Canada. And I haven't been directly involved in managing the company between that time and the early 2000s, but then subsequently in 2003, I became the president. And I did two things with the company. Number one, we actually did a lot of work in China, and China was very hot, starting in 2002 and 3. I went over there when Sarge was on. It was very easy to make deals. And we picked up a gold deposit, which we drilled off nearly 500,000 ounces and subsequently sold and made a profit on to a Chinese group. And I got involved in the vanadium exploration industry, actually after this gold deposit was discovered and sold. And through the vanadium exploration that we did, and we developed a large deposit in Southern China, I got involved in the vanadium battery industry because we were looking for a market for the vanadium that we were hoping to produce. And that led to discovering a company called Prudent Energy, which is now called VRB Energy. And we actually generated an agreement to actually buy that company. It had over $100 million go through it in R&D. It built batteries and installed them in 12 properties around the world. But the timing was too early. The renewable business, the energy storage business, lithium, of course, was picking up small things, electric vehicles starting, but large-scale storage just wasn't there yet. And we were a little bit too early. By 2014, I'd made a deal with the company to buy it at a good price. And then I negotiated looking for someone to support the financing of that. And after a large number of meetings and a large number of trying to convince certain people that certain things were viable for the future, I managed to get Robert Friedland to support the acquisition of Prudent Energy, and he transformed it into VRB Energy, which is actively building large-scale batteries right now. The issue with VRB Energy we have is that it's a geopolitical issue. The battery manufacturer is in China, the factory. just like Tesla, just like iPhones. And people that are looking at these batteries in the West or in countries that are not related to Asia, they think it's a Chinese company, but it's an American company. And we own a minority interest in it, Robert Friedland Company, Ivanhoe Electric, which is a very large enlisted on Toronto and on New York Stock Exchange. They own the majority interest, but the value of this company is quite significant. And it'll be liquefied in one way or
so. If I can ask, Lee, so in terms for the benefit of your shareholders at Sparton, that position with VRFB, how does that benefit them in terms of the value of the stock, or I presume if it's
because it's a hard asset, Matthew, then there is because it's a private company. We're not allowed to disclose the actual valuation. We know what it is.
Got it.
And there's a lot of rumors regarding it. And, in fact, a Thailand company that makes large renewable energy installations, wind and solar, invested $24 million in it 2 years ago. And Mr. Freeland has probably invested up to about 40 or 45 million now. And our interest is maintained. It's not dilutable. That we have about just under 10%. And we're hoping that will be liquefied sometime in the next less than a year. That it'll either go public or it'll be sold to a major organization that wants to have a storage business by the renewable energy production.
Right. Okay. So
that'll be cash for us.
Right. So there's a potential cash event in the future. And I guess the difficult thing for people trying to work out, given it's a private company,
it's the valuation.
Always the case. How do you value that? How do I know what 10%
it's a huge problem. We're under a shareholder agreement with Ivanhoe Electric, but we can't disclose all these internal documents. We can make rumors, and people have done a lot of speculation. Whenever there's a good press release by VRB, our stock goes up. We had one time when the GameStop and Reddit and thing was going on where our stock traded 42 million shares one day. They were trading it for a quarter of a cent about 2 years ago. And the stock went up to 22 cents from 7. And then, of course, after overtime, it came back down again. But VRB is the core asset. The other assets we have are basically exploration projects. And we have 3 of those. 2 are for critical metals, which is safe of the day these days, you can raise money on. And 1 is a gold project. And our philosophy in exploration is to stay away from the high-cost remote areas where chances of developing something in the short term or even selling it to somebody who may want to develop it are rather low because there's a lot of mineral deposits around. And the ones that are closest to infrastructure and have the lowest capital cost to develop that could be economic are the ones that are going to get done first. So we stay close to mining areas where we have large companies that are in production doing things that represent a market for our projects.
Makes sense. But okay, let's go through those because I guess if with a privately held asset, like I say, it's difficult to quantify. Let's try and work out what we've got here. Should we start with gold? I mean, you're in Val d'Or in Quebec, well-known, prolific gold district. You've got the Bruel Gold Project, and it's a JV with Eldorado. So, again, what's the makeup of that JV?
Well, that JV right now is Eldorado has 75% of the project. They've spent probably $4.5 to $5 million on it since we auctioned it to them 3 years ago. 4 years ago. We had spent about $500,000 on it ourselves, and we determined that there was something of interest there, and Eldorado came in and did a very detailed job. They did find some new gold mineralization, and they exercised their option to acquire 75%, and we have the remaining 25%. They don't have a program planned this year. They're focusing on developing the Lac mine, which is just to the west of us. But there was a new gold discovery made by Eldorado on the property, and that definitely needs more work. And there are some other targets followed up. So the property is alive. But at the moment, of course, it's all about prioritization, and Eldorado are developing Lac or Mac zone at the moment. And
Absolutely, big project for them, important project for them. So again, this is a case of few shareholders trying to work out valuation, because this will be rolled into as part of their exploration budget into their overall Eldorado Gold valuation, market valuation. So, is there any way that any help that you can give in terms of trying to allocate a value?
I've been involved with people that value projects for a business and write 42-101 reports and that sort of. And one of the ways of valuing some of these projects that are, I guess you call them brownfields. You start off with greenfields, brownfields, then you go to something where you have resources. Is what's the justification? What's the budget for the next justified amount of work that has to be done? And very clearly, right now, Eldorado has spent, as I said, $4 to $5 million on this project already. We spent $500,000 on it before they optioned it. And they optioned it basically in one day. I showed them the drill core. Their geologist looked at it. And the next day I got an offer. And so, we did our homework and we did a good job. But I would probably gamble by saying right now that the minimum budget that they would put in for the next round of work on that project would be at least $1 million, $2 million. Because it's a drilling project. The zones that are there have to be drilled and seen if they can be defined and turn those intersections into resources. And that's detailed work. So, drilling is not cheap these days, although it's gotten cheaper since the market has softened. I would say $1 million to $1.5 million minimum for the next expenditure budget.
Right, and then again, because for the terms of the JV, they've earned in 75%. I mean, is that what happens to the 25%? Is that a free carry?
It's a full joint venture.
Right. So
what we are actually doing, we're in the process actually of selling or trying to sell our 25%.
Got it.
Eldorado, we're negotiating with them on a sale. They did have an option to buy it at a rather higher price than they were prepared to pay. So that's why they just exercised the option for 75. But at the moment, we're negotiating with them on a new sales price. And we will retain a royalty, of course. And that royalty will have some value. Of course, it could be sold to a royalty company once a resource is found. But in terms of valuation for that project, my first comment was that the real value of it now is how much money is justified to spend for the next round of exploration. And if it's $1.5 million, we would be asked to put up 25% of that at this time. If we sell the project to them, of course, won't take place. They'll give cash. Let's take it.
Got it. Which is what, the preferred option?
That would be for us the preferred option. Because,
right.
And I think for them to, having a joint venture with a junior, dealing with the joint venture, the management of the joint venture, it would be much easier for them to own 100% of it, have the royalty for us, and we'll get cash out of it from them.
Right. So in terms of the JV number, which they don't want to pay, what was that?
Well, the old deal was that they would pay $1.8 million plus 4 years of cost of living allowance, plus give us 2.5% royalty when they buy out half the royalty. And that was a little rich for them after they'd already spent about $5 million on the property. So they just elected to take the 75%.
Right.
At the moment, we're negotiating a new price, which could be more palatable for them. And of course, we want to go up to why.
Okay. And do you have a timeline of that, or are they driving the?
Well, it's underway right now. I mean, we trade emails every week or so, and I'll be frank here. One of the things that we're looking at is Eldorado has a lot of projects, some of which may not meet their criteria for additional work at the moment, but they may have small deposits or small discoveries on them. So we've actually asked them if they're willing to perhaps give us one or more of those projects as part of the payment.
Right.
85%.
So it may not necessarily be a cash, or it could be a
cash.
Well,
it will be some cash, but I think the thing is, in the context of that, if we go into one of these projects where they've found something and develop it to the point where it makes sense for them to take it back, they would have a clawback, but that could pay a significant amount of money to us. So that's one of our negotiating strategies.
Okay, so that's where you're at on that one. And in terms of the Oak Gold property, which is
Oaks
in Ontario,
is actually sitting about 3 kilometers from the Young-Davidson gold mine that Alamos is producing.
Right.
Alamos hasn't really paid a lot of attention to us, mainly because they've been focusing on their deal with Argonaut and the Island Lake mine. They bought Argonaut so they could get the mill, because they get much higher production at Island Lake than they expected, and they can't put it through the mill, so they've done a deal to pick up Argonaut. It has the Mageo project in Wawa, and it has a mill which is oversized in the context of what Mageo can feed it. And but Alamos is, I'm in communication with them. I'd like to show them everything. They haven't even looked at our drill core yet, even though it's stored at their site, at the mine. And that project we had lots of great anticipation for it because, number one, Harry Oakes sponsored it. Number two, there were some decent old gold intersections. Unfortunately, we weren't able to reproduce them. We did find gold and some silver and some copper there. But that project has got 5 untested drill targets that we haven't even touched yet. We're in the process of applying for a government grant to support the drilling. Induced polarization, IPN, subjective detecting. And they were never found before because nobody ever did the work and amount of needed. And it's a very interesting project.
Yeah, sounds like.
There's a producing copper mine right beside it too, as well, that produced for 9 years.
So again, preferred option there would be to...
I would prefer to drill and get some good results and then option to Alamos.
Got it. Okay.
If Alamos, we're in the process now of accumulating a rather large land position around it. And Alamos, ore bodies are declining assets. And Alamos at Young-Davidson is doing very well there. But they got about 6 or 7 years ore left. And they're mining it underground at a huge rate, 9,000 tons a day, which is good and remarkable, and making a lot of money. But eventually they're going to have to do something to find more. And if we have targets that are worth testing, they'll have to come to us because we own the ground.
Right. And talk about, in terms of the drill core sitting on their property, how many meters are we talking about?
We drilled about 800 meters. It was number of holes. But the drilling was confined to the area around the old shaft where the old intersections were. And the other 5 targets that we have are not in that area. One of them is on that particular target, but the other ones are within 500 to a kilometer and a half away. And they're totally new, untested. In fact, one of them is on, if you understand the Canadian mining situation, we have leases which are like patents, and it's a project. And leases are from the old days when you staked a 40-acre claim, which are supposed to be a quarter mile by quarter mile, and they were all done magnetically, so not true north south anymore, so they're all cockeyed shapes. And one of the very good targets that we have is on one of the leases, but the surrounding block is owned by Eldorado. So we've got 40 acres, roughly small block inside Eldorado, or Alamos Glenglar. And, they just haven't paid a lot of detailed attention to it. So they've had a lot of changes at their operation with the local geologists who are keen on what we were doing, but it's the corporate people that have to make these decisions. The local people just do it. Won't.
Right. Okay. So there is. So you're saying I want to drill?
Yeah, I want to drill all these targets and then try and make it look better so that Eldorado or Alamos will come in.
So you'll need money I know you've raised some money recently, but it's not presumably not for drilling purposes.
Well, it is actually.
Is it? Okay, tell me more.
We raised money at the end of last year, and we raised more money June. And, part of it is let me go back to your checks and close because it was.
Right, that's okay. That's for Eldorado project, right? But are there any plans for allocating capital at gold properly?
Well, what I'd like to do actually is deal with drilling in 2 phases. We have a system in Ontario where the Ontario government will finance up to $200,000 of your exploration for an approved project. And they've been doing this for the last 2.5 years. And we have an application in place for $200,000 to support the drilling on this project. And they're supposed to be giving us the answer if the project is approved or not sometime in the next 2 or 3 weeks. We've had a lot of talks with them. They could read that, the project meets their criteria, but the bureaucracy seems to be slow moving. Of course, holidays, during the summer is a bad time to get decisions made by anybody. And but we feel that money comes in, we're going to drill that project, and
as well.
It's a good it's good support. The government means to support it.
Right, here we are for the second part of this interview. We interviewed you in Beaver Creek, give us a kind of backdrop to the company and yourself and what the opportunities are. I think today what I want to do is focus on the 4 assets, 4 projects that you've got going on. I'm going to start with VRB Energy. Bit of news this morning. What can you tell us?
Yes, that's right. We've actually had a very, very important news release from Ivanhoe Electric, the majority owner, obviously, of VRB Energy. This relates to the formation of a joint venture in China with the producing company that makes the batteries in China that's 100% owned by Ivanhoe, by VRB Energy itself. And 51% of the joint venture is now going to be owned by a very large Chinese conglomerate that is one of the 500 top companies in China with over 10,000 employees. And that's going to allow the Chinese business to evolve very, very quickly, because now there's not this hangover of the sense that VRB and the batteries that are being built is actually an American outside company outside China. It's going to be producing batteries in China with a multiple system where under the company is majority owned by a Chinese entity. And that's very, very important. Plus, in relation to that, there's a $55 million investment by the incoming partner to the joint venture. And $35 million of that will be used for the advancing of the Chinese joint venture company to build more batteries, build 2 new factories in China to build batteries in addition to the ones that are already being built at the factory near Beijing. Plus, $20 million of that $55 million is going to go into a company called VRB USA, which is going to be spun out by VRB Energy Inc. To actually develop a factory to build vanadium flow batteries using the VRB technology in the United States, along with a manufacturing plant for electrolyte. And that's also massively important because it will develop new opportunities in North America because of this geopolitical history that we've had, that everybody thought that VRB Buildings Batteries is a Chinese company, but it, of course, obviously never was. But that's the problem that everybody has seen in the perspective of looking at it. So now they have a vehicle that can build and sell batteries in the United States and internationally, and the progress going forward of a big investment to build a factory in the U.S. to actually manufacture them. Plus, there's a relationship between the Chinese joint venture and the VRB USA company to share the technology and share the production of some of the critical components that can be built in China and sent over to the U.S. for installation in the battery units.
Interesting. Now, I think one of the things that we talked about earlier was how do we put a value on this thing? I think it's the constant question that you get. Is this $55 million an indication of the value of the company, or is it really the access to the Chinese market, and I guess now the ability to access the US market, some kind has some value being put on that, and maybe we shouldn't read too much into the $55 million?
Well, I think we can, because the $55 million places a value on the joint venture company of about 114 million US.
Okay.
And 49% of that is owned by the VRB Energy offshore entity, which we own 10% of roughly. So you can factor in a valuation on that side of roughly $7 or $8 million for our account only, And
okay.
then beyond that, the value of VRB USA, which will be basically a 90-10 ownership by ourselves and Ivanhoe Electric, will be determined when the transaction, of course, is done. But that's going to give us the potential, if they take VRB USA public, for instance, of liquidity for our interest in the entire package. So we feel that's very important, and it's actually enhanced the valuation to us of the 10% roughly ownership in VRB Energy Inc.
Okay, so maybe potentially some line of sight as to what it's actually worth to you, yet to be determined when that could be either a cash or liquid event for you in some way, shape, or
Well,
form.
there's a possibility that I think that Ivanhoe Electric would like to take VRB USA public.
Okay.
And when that happens, we will get our share of the public issued vehicle, and that will give us liquidity and our ability to actually cash in our interest, which will be very, very good for us.
Okay, well, sounds like good news. Things have moved forward, and let's see how things play out and over what sort of time frame they play out. So, do you mind if we talk about some of the other assets? Because I'm going to assign some kind of value to that, and as a sort of near-term value, it feels like as well. Pulse Critical Minerals property, for a starter. What is that?
Well, that is a project in northeastern Ontario, which actually crosses over into northwestern Quebec. The project tenements, as they say, or the claims that we own, are actually about half and half in Quebec and in Ontario. And it's an area that's been ignored for exploration since basically 1997 in any comprehensive way. It hosts mineralization for critical metals that includes copper, zinc, nickel, cobalt, and in one case that we have data for, there's actually a gold zone, which are not critical metals, but obviously with the high price of gold today, we will pursue following up that gold zone in the coming program. Now, that project we have 100% of, basically. We have completed a lot of work on it. We've actually applied for government support from the Ontario Junior Exploration Program subsidy system. It has actually been accepted, but we don't know exactly how much we're going to get yet. But that project, that program in Ontario can provide up to $200,000 of funding as a subsidy with the right projects have the right data. And so that's in the process now of being negotiated. We have a drilling program that's beginning there, actually probably in the next week. We've mobilized our drilling equipment to the area, and we're setting up a system where we can actually conveniently organize the logistics, because it is back in the bush off the main roads. But we're looking forward to having some results for that in about probably 3 weeks to a month when we get the initial few drill holes in. And we've budgeted a couple of $100,000 for that. The Quebec side of the project, which has a number of untested drill targets as well, we're in the process of waiting for the exploration license from the Quebec government. We've filed everything. Everything's been done. And it's just a question of getting the document now.
Okay, and you've got that 200,000 to
Well,
do
we have enough money to complete that work. That's not a problem, right?
Okay. And the end game there being what, to move this through to what kind of phase?
The end game will be to get assay results. See, there's been the old drill core was not available to us to check. All we have is the historical exploration data, which has some positive intersections for these critical metals. And so we're going to re-drill at least one of the good holes to get a handle on the geology and get new assays for the mineralization. And then we'll carry on with the additional targets. Of the area that's been tested historically, there are 8 untested anomalies. Only really 3 of the anomalies that we found with our airborne survey have actually, and groundwork follow-up, have actually been tested. So there are some brand new targets in there, and some geological aspects that are rather interesting that could enhance the size of the mineralized zones. So we're hoping for some good assay results and following up these targets. And we know they're there. There's no question. It's just a question of getting new data with new drill core.
Okay. I'll come back to that. Bruel Gold property
Yeah,
in the Abitibi Gold Belt.
Bruel is now a joint venture between Sparton and Eldorado Gold. Eldorado operates the Lamaque mine to the west of us in the Val-d'Or area, a very, very successful company. And of course, Eldorado has other projects around the world. Eldorado exercised their options to get 75% of that property from us. We still own 25, but we're in the process of negotiating with them to sell that 25% or exchange it for a combination of cash plus one or more Eldorado exploration projects that at this stage do not really appear to be large enough for Eldorado to want to continue with. And at the moment, we're probably waiting, I guess I would say, for Eldorado's exploration group to show us or give us information about one or more of these projects that they would be willing to option out. And of course, they would have a clawback if we found something good enough that met their corporate target. Then, of course, they would claw it back and we would get a lot of money back, 2 or 3 times our exploration cost. That's the normal type of deal you do on these things. And plus an interest, a royalty, or whatever. So that's ongoing. Eldorado have been very busy with a number of things. They have their international work going on in Turkey, etc. And so they're not the fastest group to react, but we have correspondence weekly with them. And I think within the next month or 6 weeks, we're going to have a deal with them on the remaining 25% of the project. So the valuation will be some cash consideration, plus a royalty, plus perhaps an interest in a new project.
Okay, so it's again. So that's in discussion to be seen, but you expect there to be some cash. And what would that negotiation be based on? Is it pretty much in their hands as to how they value that?
Eldorado had an option, a second option, to acquire that 25% for a cash consideration of about $1.8 million historically. And of course, they'd already spent $5 million on the project, so they didn't feel they wanted to pay another 1.5 or 1.8 million to get another 25%. So they just exercised their option, left us with the 25%, and now we're trying to negotiate probably obviously a lower cash payment, but some additional consideration. And clearly, we will have a royalty as well as whatever we can negotiate in terms of the cash. But there will be a cash payment, and we're obviously negotiating for as much as we can get. It makes sense for Eldorado to acquire that 25% and not have to deal with the minority partner in a joint venture and all the legal and corporate and time and everything else that's involved in that. So
understood. Okay, and then just lastly, before I sort of come back to all of them in one kind of bundle, is Oak Gold property,
the Oak Gold
Alamos Gold's project. Yeah,
we have 5 drill targets there that have not been followed up based on the work that we did historically. Of course, everything sort of slowed down after COVID, but we're in the process of trying to negotiate a joint venture with another large gold company and another partner in that area. And I think we're probably going to be seeing some new work there before the end of the year. And that will involve drill testing of one or more, maybe 2 more, 3 more of these targets that we have generated. And the situation there is that these targets are not just for gold. They're also for copper, because we're tying on to an adjacent former producing copper mine, as well as the Alamos Young-Davidson gold producer, which is a 200,000 ounce a year gold deposit producing as we speak.
Okay, so if I look at all of this the kind of package, this portfolio of yours, it seems right. Clearly, you, like lots of people, kind of cash constrained and being able to do what you want to do because the market's tight at the moment. So, is it fair to say that your fortunes rest in the hands of how you can monetize the VRB Energy holding? And then what you get, and assuming you can get cash from that, what you can do with it. Because I think Bruel sounds like Eldorado will move at their own pace. And, who knows what comes up at Pence, because, of course, because that's an exploration play. You're going to be spending money on that to try and create some value there. So how do you manage, and how do you, in your mind, allocate capital to these projects, or how do you monetize these projects? Kind of keep the lights on and keep going.
Well, I think there's two things. Of course, we get the $200,000 government support from Ontario, which is under negotiation. We will get something. We just don't know the final number. That gives us a big cushion for expenditures for the next, basically until the end of next year. The other situation is that regarding monetization of VRB, at the moment, things have moved rather quickly, and we were surprised at this, that Ivanhoe Electric has gone as quickly as they have into the situation with splitting off VRB USA and, of course, doing the deal with the Chinese company. Timing, I would expect before by Q1 of 2025, I think we will have some clear understanding of what's going to happen with that entire situation. In terms of prioritizing where we're spending our money right now, we're prioritizing where we're going to do this initial drilling at Pence or Ponce. And any results that come out of that are positive, we are going to look at a possible joint venture partner on that, because there are local people sniffing around looking for these things. And any good results that we get, we will negotiate something that is good for us and good for them. Now, one of the things we've also done, which I didn't mention earlier, is that I'm making an application under what's called the BHP Explore program. A BHP Explore was set up 2 years ago by BHP, the largest mining company in the world, to generate new exploration opportunities for BHP by supporting junior individuals or junior companies, both private or public, in exploration plays around the world. And they're giving $500,000 out as a clear grant to these companies as an initial payment if the projects are accepted. And we believe that Ponce Montreuil, which is the township in Quebec that has the other part of the project, we believe that this project for Outokumpu-style mineralization, the Finland world-class deposits for copper and nickel and zinc, we believe that we may have a chance joining with BHP as a BHP cohort and perhaps benefiting from that opportunity. So I'm in the final stages of making that application now. I did go to Vancouver 2 weeks ago and attended a seminar by BHP face-to-face on what they're doing and what they're looking for. And what we're doing at Pence or Ponce is consistent with what they've indicated to the rest of the world and the exploration community that they're looking for. They're looking for new ideas, concepts, regional plays, and things that have been underexplored or under-recognized in various exploration areas around the world. And they've only got one project so far in Canada to support it. So I'm optimistic, but of course, you never know. There's a lot of competition for these things, and they apparently have had over 500 applications previously from various opportunities from individuals. And so far, I've only given out 13 $500,000 payments, but you never know. So I'm trying that as well. And if that came through, it would be huge for us, of course.
Yeah. And the other thing was, I mean, I used to say keeping the lights on, but you do have EDCOR drilling in the background. I mean,
that's correct.
I read somewhere that you say that kind of covers
EDCOR
a lot of the G&A.
EDCOR basically for the last almost 20 years has supported the company's internal expenses. Now, at this moment, EDCOR is going to do the drilling on the Pence project. So we'll be EDCOR will be invoicing Sparton, and the money will go from one pocket into the other, but it's still an expense. So, but we believe that we can, use that internally for bookkeeping purposes as a source of revenue, which we will do. And we obviously have an opportunity in the same Pence area with a company out of Australia that has indicated that if they get their funding together, they will support us and use us as their drill contractor. So beyond that, we're always looking for new drilling contracts, but we can drill cheaper for ourselves than anybody else, a third-party contractor. So we're doing that. And of course, if we go out and have contracts with third parties, we'll charge the going rate and get revenue. We've generated probably in the last, since 2010 and 11, probably about $3 million in revenue for Sparton profits. And that's very important to keep our cash flow and our internal expenses covered.
Okay. I'm going to ask you to tell me why I should, as an investor, invest in your company and what exactly I'm investing into.
Well, I think number one, because the core asset of VRB Energy has some very significant value in terms of number of cents per share or value per share that we have our outstanding capital. I think that's the first thing to look at. And that will be monetized, guaranteed, probably within before the end of next year. The exploration projects are good projects. They have unevaluated targets that have never been tested before that we've recognized and developed. Any positive results there and any positive news about joining with other groups to further develop those, as partners, larger companies, will benefit us. The problem right now, and I know that you're going to have a discussion forum with the people about what's happening to the junior exploration market, is that there's a big disconnect with, there's two things going on. There's a big disconnect with, first of all, gold prices and junior gold equities. There's some very good companies around that have gold deposits that are not recognized in the marketplace with share price. And the other issue is that, of course, a bit of an economic slowdown for other commodities, base metals, has generated a lackluster interest in the marketplace. But this is another cycle, I believe. And the hot money went to AI. AI is starting to show cracks now. And I believe that we'll be back into a market with investors in our type of company, our type of projects. And we believe that over time, there'll be some value recognized. I mean, at 3 cents, the stock's at 3.5 cents today. It was 2 cents last week. There was an overhang in the market from one of the flow-through share investor funds. We cleaned all that up. I was able to find people that bought over 8 million shares of stock last week at 2 cents. And the market's come back up to 3.5 now. So all those people are very happy. They've got a 75% increase in their value, in less than a week. So, from here, we see, the stock, if there's another VRB positive news that shows our value increase, we should see the stock somewhere getting up to close to the 10-cent range value. And then liquidation and getting cash into the company. Well, beyond that, it's up to the market to decide what there is. But often companies don't get full value for the cash in the treasuries, as you well know. But if we have a large treasury after we liquidate our VRB interest, plus we have some other positive opportunities that are ongoing, I think there should be a significant appreciation in the share price. And at 3.5 cents, what can you say?
Lee, appreciate your time, and thank you for going through the projects and opportunity. Obviously, exciting news today with the VRB Energy announcement. Be interesting to see what happens with VRB Energy US as well, coming into this critical minerals awakening we're seeing over there. We look forward to hearing more from you. Stay in touch. Thank you very much.
You're very welcome, Matthew.